a 9-year-old? It's a valid question, right? Simple, safe, predictable, consistent, and no way for her to lose. Looking for 1% a week because that's what I need in order to live comfortably. I'm 61, I'm retired, and no, I'm not a billionaire. So yeah, I still have to work for my money. What do I mean by that? I take the money that I've accumulated since my working days to now, and I use that to invest to get 1% a week, and that gets to pay all my bills. So no, I'm not as rich as you may think I am. So however much money you think I have, I don't. I'm just comfortable where I am, and I'm not trying to sell you anything. So rest assured, you can just sit here to learn. I'm not going to try to sell anything. Why is there annoying piano playing? Eric, do you think classical music's annoying? I'm terribly sorry there, Mr. Eric. Alexa, off. You're aggravating Mr. Eric. Okay, Eric, you good? All right. For Truck Hill. Hey, for Truck Hill. Helen, how you doing? So, that being said, to teach a 9-year-old simple, safe, all that kind of stuff, I had to come up with some rules, and they're very simple, basic rules. I have found as I continue doing this, it is easier to teach children than it is to teach adults because adults are stuck in the habits that they have accumulated over the years. Okay, it's a simple strategy. It really, really is. Number one, it's all 1, 2, 3, A, B, C. Very simple. Remember, she was 9 years old and she was not a Mensa student. Okay, so simply put, find some stocks that you like. Well, that sounds interesting and simple, right? Well, here you go. There's 10,371 companies this week. They add more every single week. More and more companies are trying to jump in to take advantage of this stock market stuff, to raise capital and to further their business, because that's what we're doing. We jump into a business in order to create capital so that we can live a nice, comfortable life, because we're the only species on the planet that's got to pay to live here. So let's get to it. Any other $5 stocks that return a high premium? Hertz, Riley are the ones we usually have. PMW returns are not great. Okay, PMW. I'm not 100% sure of that one. Sit tight, see what we can do. I don't have any at the top of my head. But, all right, as I was continuing. So, for my 9-year-old, I had to come up with some rules, and they're very simple rules. And as I was saying, adults make it more complicated than it needs to be. So, here are the rules. Pick some stocks you like. Now, the ones that I like, well, they're the dividend kings, dividend aristocrats, dividend champions, dividend contenders, and, of course, Warren Buffett's list. Hey, he's doing pretty damn good. I might as well look over his shoulder and see what he's doing. Needless to say, those 5 lists, if you're trying to find out where they are, right on Google. Right on Google search, Dividend Kings List 2025. Boom, they just show up. There they are. There's somebody out there. Actually, there's a lot of somebodies out there keeping track of these lists, because people like me, some of you, want to know who is the best of the best. Well, you can't get any better than 5 decades of consistent profits. That's why they're called the Dividend Kings. 5 decades of consistent profits. Well, great. If I'm looking at these companies, Dividend Kings, 50 years. Dividend Aristocrats, 25 years. Dividend Champions, 25 years. Dividend Contenders, 10 to 24 years of consistent profits. So why the hell not? So those 5 lists will only give you about 300 companies. So here's the thing. You need to decide what is it you want, and then how are you going to get it? Well, I want consistent cash flow safely. 2 goals in mind. Consistency of profitability, that means every week I want to get paid. And number 2, preservation of my capital. I'm 61, I have no desire to go back to work. All right, I put in a full half a century. My first job was 11 years old at Old Man Simmons Farm. Okay, you may think that's weird, but back in the 70s, 10-year-old and 11-year-old working on a farm, perfectly normal. Okay, my father wasn't around. My mother said, well, whatever. I leave the house, and, as soon as the sun comes up, we go to school, get home from school. No, we wouldn't even go home. Right after we got off the school bus, we jumped in Old Man Simmons' truck, and we went to the farm, and we did work. We got $5 a day. And on the weekends, we'd work all day long, and we got $20 a day. $20 to work from sun up until sundown in the 70s as an 11, 12-year-old kid, because I started like when I was 10. No, actually, I was 11. 11, 12, I worked at Old Man Simmons Farm. Don't get me wrong, Anyway, let's get to what we're going at. So, as I was saying, we're the only species got to pay to live here. So let's see what those rules are. Number one. Oh, they were the steps first. Sorry. Number one, find out what companies you like. That's not that difficult. If you've never heard of them, you don't know what they do, why the heck are you putting your money into it? Seriously, think about it. Rule one, never buy something you don't understand or you don't want to own. Well, that's pretty simple, right? If you don't know what they do and you don't know who they are, then why are you putting your money there? Number two, never sell at a loss. It defeats the purpose of the game. And yes, it is a game. It's an adult game and it has adult consequences. Okay? Simple. Never buy something you don't want to own. Number three, make sure the company is consistently profitable. Now, we already went over this with the list making. Make a list of good companies. Well, good. Rule number three is make sure the company's consistently profitable. Rule four, weekly options only. It says weekly options. This show name is Dividend Investing for weekly cash flow. So that means I can only trade something that trades on a weekly basis. So no, I don't do monthly options. Just doesn't make sense for me. The numbers just don't work. Rule number five, make sure the numbers work. And we're going to be explaining all that as we progress through the evening. So what I ask of you politely, if you have something you want to ask it only once, because I do try to answer all of them. I got 9 channels that we're broadcasting live to, so I'm getting questions from all different directions. I'm not ignoring your question. I'm just pacing myself until I can get someone else in here to help me answer some of these questions, or to at least identify them. That being said, ask the question once, trying to be courteous. Please, we're all adults here. Let's not be childish. Some of the comments I see are just like childish, like, let's not do that. So you give me stocks to take a look at. I will give you my 5-step series, 5 steps. Well, what am I looking for? How do I do it? And I'm not trying to sell you anything. I'm just trying to teach you, to educate you. And no, I'm not doing this to be a nice guy. I'm doing this because I am trying to create a video diary for my children and my grandchildren. Because when I'm gone, they're going to want to know this stuff. Because the stock market's been around for over 400 years. Do you think what I know now, someone else didn't know before me? And someone else is going to know after me? Well, I want those after me people to be my children, my grandchildren, my great-grandchildren. So that's why I'm creating this video dialogue, or whatever you want to call this thing. Digital journey. Ooh, that's a good one. A digital journey. So let's get started. You give me a stock to take a look at. Please do me a favor. Make sure the stock, you understand it. That means you should know whether or not it has weekly options, and you should know whether or not if it's a profitable company. Okay? So let's get started. Who wants to go first? We got a whole bunch of things going on over here. What do we have over here? Got one question. Any other $5 stocks? See, to get to a $5 stock, you're going to need some kind of a wizard. And actually, Thinkorswim has it. It's called a scanner. You can scan right here. It's my pen. Let's get rid of this. Get rid of this. Right there. You can actually scan what you're looking for on Thinkorswim. Now, I'm not trying to sell you Thinkorswim. Okay? It's like, I don't get anything. I don't even get a thank you for using this all these years and showing people how great I like it. So it's there. All the parameters you can check off for the stock prices and have weekly options. But that's not what we're doing here. Okay, we want a system, simple, easy, predictable, consistent. I love the Lee family. Profitably, consistently, predictably, safely. I love them all. Anyway, so who wants to go first? What do we want to look at? So what do we have over here? A whole bunch of people saying hi, hello, all that kind of nice fun stuff. Hey, Rich Bruner. I guess I don't follow the rules. Rich, you know what? I'm not, no, see, I already said it, so someone's going to automatically put two and two together when I say somebody bought something that wasn't on the list, and it's like, I can't tell people what to buy, and I don't. I don't tell you what to buy. I don't tell you what to look at. All I'm telling you is what I do. Now, what I do and what you do, two totally different things. I don't give advice. I don't give tips. The only thing I do suggest, number one, don't put money into the market until you understand everything. They actually have paper trading. It's kind of like Monopoly. 4 greenhouses, 1 red hotel. Same thing in the stock market. You can paper play with paper money until you understand it, until you get good at it. Okay, then And only then put real money into it. Okay? Because then you're not risking as much. What tools do you use to find good stocks? Zcuz. I use Google. That's my tool for finding good stocks. Dividend Kings List 2025. Enter. That's it. Dividend Aristocrats List 2025. Enter. That's it. And it just pops right up. Those are the companies I like. Consistently profitable year after year after year. It just makes sense to me. So I'm just going to show you what I do. And there's literally hundreds of guys out there just like me showing their system, their thing. Great. A lot of them do work. Now mine, it's very niche specific. I'm looking at dividend stocks, specifically companies that are consistently profitable. And I'm not looking for a big, huge win. I'm looking for consistency, safety, and profitability. What I do is so damn boring, most people go out of their minds because it's the same stocks over and over and over again. Why do you think that is? Because they're profitable year after year after year after year. I mean, it just makes sense. So yeah, I'm buying and selling, buying and selling, buying and selling. And when I'm collecting, I'm not collecting the jump up. That's not what I'm collecting. That's not what I'm looking for. I'm not looking to buy down here and have it shoot up and say, yeah, I was right. No, no, no. What I'm looking for is a simple, safe trade. And it's called a covered call. Well, it's simple. The stock doesn't have to move at all. It can stay at the exact same and I'll still make a profit. So I'm going to explain that. And I'm going to show you some trades as we progress through the night. Right now, I need someone to step up and say, yo, I'll be first. This is what I want to look at. Okay, we got quite a bit of people here. What do we have first? AMTN. What is that? And I will call you out, okay? I'm a Gen Xer. We don't care about your feelings. We really don't. If I see you doing something stupid, in my opinion, and it's always my opinion, just remember that. It's just my opinion. We're all allowed to have opinions. All right. Hopefully, I don't piss anybody off, because of my opinion. All right, first one you want to take a look at. Okay. Oracle. Let's see how this goes. Oracle, ORCL. ORCL. Okay, really? When I say understand what you're looking at and know what you're looking at, if you knew Oracle did this today, why the hell are we looking at it? That's like, you know what? It's already happened. There's nothing we can do about this right here. We talked about this yesterday. Okay, we did. With a jump up like this, let me zoom in a little bit closer so you can see a little bit better. Okay, it's going along nice and slow, and all of a sudden it shoots up like this. Well, anytime you get a big, huge jump like that with that much space in between, almost always this gap fills and the stock starts to come down. Almost always. We talked about that yesterday. But why are we looking at it today? There's nothing we can do about that. And you can't plan for that. That's what you call a black swan event. That happens and nobody really knows why it happens. But it does. So how can we take advantage of it after the fact? Well, we really can't. So why are we looking at it? Well, I like Oracle. I do. Well, let's pull it back for a little bit. Look at the whole year. Okay. I'm not even going to count this, yesterday and today. Here's your high, here's your low, here's where it was, here's where it is. Look at what it's doing. Up, down, up, down. Now it's going up. Well, great. What's going to happen next? It's going to come down. Well, here's your up right there. And today is the first day coming back down again. Well, when it jumps that much, you got people like me saying, no, that's a good enough profit for me. I'm out of here. So how do we take advantage of that? Well, there's a lot of ways to take advantage of it. Nothing that I'm going to show you tonight because that's not part of my strategy because that doesn't happen all the time. That is not predictable. You don't know when that's going to happen. So I want to show you something that consistently happens time and time and time again every single week. Not something that happens once in a blue moon. All right, so yeah, I like Oracle. No, it's not. It's going to be quite a while before I jump into Oracle again. What do we have next? Rock. Chocolate bug, R-O-C-K. Is that even a stock? R-O-C-K? R-O-C-K. Now that's interesting. But I'm going to say no. Now who said this one? Chodabug. All right, so Chodabug wants to take a look at Rock. Now Chodabug let me just point out something to you for a second. When I said rule number 4, weekly options only, well, this here, September, October, November, February, that's a monthly. That means once a month, that's it. That's not going to work. Okay, weekly options only. What we have next? Oracle, we already did Oracle. Akula, how are you doing, Alan? Eric, what's going on? Crunktold, run for the hills. Okay, Colin McClellan. Savvy Bella liked the music. Sorry, dude. All right, Harold, what's going to happen? Xoff. I guess I don't follow the rules. My bad. Rich did that one. What's going on over here? All right. Hold on. I got some feed in the background. That's Francis's iPad. There we go. All right. What else we have? I had British America Tobacco. What's the ticker symbol on that one? For years, and it has done nothing. N. That's the stock symbol, N? Namaste Technologies. I'm assuming that's not it because nothing's popping up. Okay. General Youngster. Okay. Agalflack. Okay. A yellow. What's going on? All right. You guys got to give me something good to look at. What are we looking at here? New Money. Joseph. Jeremy. Okay. Nothing. HRL. Hormel. Yes, that is the desktop version. Right there. Here we go. Jello Nibbler. Love that name. How you doing today? Hormel, huh? HRL. Now, for those of you who don't know, okay, Hormel, HRL, is a dividend king. Well, what does that mean? 5 decades or more of increased profits. That's what it means. And they've been in business for over 100 years. So I don't know what that means to you, but to me, that means safety. Okay? Predictability, consistency. So that's a company I want to look at. So when I see a chart, very first thing I want to do is look for 5 things. And it should take you 3 to 4 seconds. Okay, number 1, the high, right there. Number 2, the low, right there. Number 3, where was it a year ago? Number 4, where is it now, today, right here? And number 5, what is the motion of the ocean, the crest of the wave, the trail through the woods, the river around the bend? I don't know, whatever you want to call it. Okay? Down, up, down, up, down, up, down, up, down, up. Okay, that's the flow of the river. That's the flow of the stock. It goes up, it goes down. It's like a snake through the trees, whatever. But high, low, where was it, where is it, and where is it going? Well, we see where it's going right here, but we want a closer look. But before we take a closer look, we're going to take a look at the numbers. Remember, Rule 5, make sure the numbers work. Well, what are the numbers? Well, the biggest number on the board, 25.42, 25.42, 25.42, 25.42, that's the current price of the stock. Well, that's what it's at right now. So what does that mean? That's the big number on the board. So if I'm going to buy it tomorrow morning, that's what I'm paying, 25.42. Now, do you remember the part where I said safe? Okay, well, I'm going to show you a trading strategy that is basically extremely safe. Safe, so safe. So safe, they say, you can do it in your IRA. Basically, you can. A covered call is one of the few strategies that you can do in your IRA because you can do a lot of trading strategies in your IRA. But the government thinks this one is so safe, you're allowed to do this one. It's called the covered call. That's where you buy the stock and then you sell it to someone else almost at the same time. As I explain, you will see. Like a good movie, everything gets explained in the end, and you'll see. All right? So, if I'm going to buy it at this price here, $25.42, I want to sell it the same time to someone else so that I can get a profit without doing a damn thing. Okay? That being said, I'm going to look for the closest strike price. Right here, these are the strike prices. Okay, 21, 22, 22.50, 23, 24, 25, 26, so on and so forth. So if I'm buying it at this price, I can sell it at any one of these I want. The nice thing about that is each one of these is kind of like, oh, what's the sale price today? Well, 25.42, the closest one is 25, and that's going for 6. No, it says 0. That can't be right. But it should be somewhere around 50 cents because the ask is 65, so usually there's not that much of a difference between the two. But anyway, this is what I'm bringing in. Okay, is it more than 1%? Because that's what I'm looking for. I'm only looking for 1% every week. Now, I'm not looking for the stock to go up in price. No, I really don't care if the stock moves at all. As a matter of fact, I would prefer it does absolutely nothing because stocks only go 3 different ways. They go up, they go down, or they go absolutely nowhere. So if I can get 2 out of the 3 in the bag right from the beginning, why the hell not? Okay, so let me explain. If I'm buying it here, I'm selling it here, the current price is here. If it goes up, I win. If it stays the exact same, I win. And sometimes it can even go down a little bit and I still win. That's the kind of trades I'm looking for. Unfortunately, it doesn't pay a whole hell of a lot. 1, 2, 3% sometimes. But it's consistent and it's predictable. And it's so simple, I can do it in less than 5 or 10 minutes every week. So every week, I look at the stocks that are up for consideration, which means the ones that have the dividends coming up, because a dividend, which is a portion of the corporate's profits.
Motion detected at the front door.
Someone's here. So a dividend is a portion of the company's profits that they give back to the investors, and that's what I'm looking for. Because when you retire, you get 2 choices and only 2. You can buck up, buttercup, do it yourself, figure out how this whole thing works. Okay, invest your own money, take responsibility, or pass it off to someone else and accept whatever it is they're going to give you. See, right now the norm is 4 to 6% draw. So if you have a nice little lifestyle and you need $80,000 a year to live comfortably, well, a 4% draw, you're going to need at least $2 million. Okay, I can't even read that one. AMTM. What the heck is that? Oh, wait a minute. We're still on Hormel. Sit tight. We're on Hormel still. Okay, hold on. Just sit tight. I forget where we were. Oh, so anyway, I want to buy it if and only if the chart tells me it's the right time. Now, the first time I look at the chart, I look at 5 things, and I want it to be quick. Because is it a contender or is it not? Is it a yes or is it a no? Well, I can tell in 3 to 4 seconds. It's not that difficult. High, low, was, is. Look at the motion. That's it. That quick. It should take you 3 to 4 seconds because it's not that difficult. High, low, where was it, where is it, and what is it doing? Okay? Get used to seeing that. All that does is tell me is where's the high of the year, where's the low of the year. Where was it a year ago, where is it now? So is it going down or is it going up? Okay, so overall, this thing's going down, but how quickly and where is it now? Well, here's the bottom right here. Now she's bouncing off that bottom. The high of the year is there, the low is there. Now she's bouncing up. Well, great. That's what I want to see. All right, and it doesn't take that long. So once I isolate that, I want to fill in the numbers. So I want to know what those numbers are. So a year ago, we're at 31.90. The high of the year, 33.82, and that was the middle of December last year. So from there, the bottom of the year was just recently on the 28th. That's the bottom of the year. Now, think about that. This company's been in business for over 100 years. Okay, the bottom of the year was 3 weeks ago. Okay, and you've heard it all your life. Most of you have heard it all your life. Buy low, sell high. Company's been in business over 100 years. They have 5 decades of consistent profitability. That means every single year it's higher and higher and higher and higher profits. Granted, it's not a lot of money, but that's not what I'm looking for. I'm not looking for the dividends. See, people think I'm looking for the dividend. No, I'm not. And I'm not even looking for the stock appreciation. I'm not. I'm looking to become an insurance salesman. Let me explain what that means. I want to be an insurance salesman. Why? Because we collect premiums just so that you can feel better about whatever it is you're doing. Okay, I know that needs more explanation. Here we go. A stock option is an insurance policy. It is. Because you need 4 things for an insurance policy. Number 1, a beginning date. Number 2, an ending date. Number 3, consideration. That's the money. That's the premium. You either pay it or you collect it, one or the other. And number 4, an agreement between 2 adult parties. They call that in legal terms, meeting of the minds. That means we're both agreeing what we're doing. All right, so I own this stock. Remember, I'm buying it tomorrow morning, first thing in the morning. I own it at this price. So I own it. Now, my agreement to you is I'm selling it to you at this price right here. That's the agreement. And the consideration is you paying me this money right here for the insurance policy. Well, guess what? This insurance policy expires on the 19th, which is next Friday. So basically, you, whoever's buying the option, because I'm selling the option, 80% of all options expire worthless. Why do you think I want to sell them? I want to be right 85% of the time right off the bat. So what am I doing? I'm stacking all the odds and probabilities in my favor. I know when the company pays their dividend. Stocks have a tendency to go up just before the dividend. If I know that information and the chart confirms that the bottom is here, now she's going up, well, that's 2 bits of information in my favor. Number 3, 80% of all options expire worthless. So if I'm selling, I have 80% chance of being right. Number 4, I'm doing a trading strategy. It's so simple. A 9-year-old can do it because that's who it was created for. So the strategy, the covered call, I buy the stock, I sell the option, I collect more than 1% every single week, after week, after week, after week, until I'm done and bored of doing it. The insurance policy, the call option, expires Friday, the 19th of September at 3:59 p.m. Well, they actually expire on Saturday, but at 3:59 p.m. on a Friday afternoon, guess what? Clocks run out, you're out of time. Okay, they settle up on Saturday. So I always tell my clients, whatever you do, don't look at your account Friday afternoon or all day Saturday. Wait until Sunday or Monday before you look at your account because it doesn't settle and everything looks wonky. That's a good word, wonky. If you're looking at it on Saturday morning or Saturday afternoon, you gotta wait for the computer to, dot the I's, cross the T's, so to speak. All right. Is it paying 1% or more? Yes, it is. So let's do an exercise. So let's do one right now. And I'm going to show you 2 of them. All right. I'm going to show you the 24, the 25. Because right now the stock's at 25.42. So I'm going to show you the 25, and then I'm going to show you the 26, which is the next one out. So I'm going to show you both of them. And then I'll explain to you the difference between the 2. One's going to be more profitable, and the other one's going to be safer. So you have that choice, the balance between, do I want safety or do I want profitability? Now remember, it's a simple, safe trade. So it's going to be a safe trade, first of all. Second of all, which one's safer? Which one's more profitable? If you get the choice of the 2, which one would you prefer? Safety or the more profit? Okay, so let's take a look. All right, we don't need this anymore, so let's get rid of that. Let's get rid of that. And now I'm going to change it from single option to a covered call option. So let's go here. Covered stock right there. I don't need to see all 12. I only like to see about 6. That works. Now, remember I told you the 25 and then the 26s. All right, so the 25 is right here. I'm going to buy it. See it? 25 is right there. So I'm going to buy it right here. And pops up right here, this green line. Here we go. So I'm going to change it to just one contract. That way you get an idea of what one contract looks like. All right, here we go. First one on the list. Now, I always encourage people to read it out loud and understand what it is you're reading. Okay? It's very important. By 1, covered call Hormel. 100. The 100 just means it has a weekly option against it. That's all that means, as far as I know, unless someone wants to correct me. Does it mean something else? That's what it means. It's a weekly option. Okay, 19 September 25. That means this option is going to expire on the 19th, which is next Friday. Well, that kind of makes sense, right? $25 call option. This is the insurance policy. So somebody wants to have the right to buy it from me at 25 anytime between now and the expiration next Friday. So what are the pros and cons? Well, if this thing shoots up to 30, 40, 50, whoever buying this option from me, they have the first right of refusal to buy it from me at 25. That's what they're doing. Now, if it shoots up, good, great for them, yay. Bears make money, bulls make money, pigs get slaughtered, share the wealth. Okay, there's plenty of money to go around. You just got to make sure you find a strategy that works, stick to it. What else you do? Don't listen to me. What the hell do I know? Do your own research. Does this make sense or does it not? It's a simple question. Does it make sense? Okay, am I right or am I wrong? And I have no problem whatsoever admitting I'm wrong when I'm wrong. And yeah, I've been wrong 4 times this year. Okay, it is what it is. All right, so the $25 call option against a Hormel stock at the market to open to open. Now, no, I did not repeat myself and I did not stutter. To open means I'm doing 2 orders at once. I'm buying the stock first. Remember, I got to sell something, but I have to own it first. So I buy the stock and then I sell the option. Okay, to open to open. Option order, off to Chicago. Stock order, off to New York. Okay, to open to open. So here, now that's funny as hell. It says always loss. What the hell does that mean? I have never seen that before. Let's go pick another one. All right, edit. Always loss. That's weird. I've never seen that before. Huh. That is weird. How the hell do you deal with that one? All right, let's look at the 26s. Okay. There we go. Don't ask me why. I've never seen that before. Always loss. Huh. All right, so if I'm buying it at 25.42 and I'm selling the 26s, well, now I'm making this much money, and it's no. I don't want to do 10 contracts. I only want to do 1. I was thinking that's a lot of money, but that's 10 contracts. I want to do just 1 contract. Here we go. Okay. There we go. That looks better. All right. Buy 1 covered call Hormel 100s. 19 September 25. That's next Friday. The $26 call option against the stock at the market to open to open. All right, here we go. Maximum profit, $68. Do you remember the part where I said simple, safe, predictable? Well, I want to know how much I'm going to make before I even do the trade, and that tells me it right here, $68. Now, it doesn't sound like a lot, but remember, that's $68 for 1 contract. So you take a look at what is 1 contract, $2,500. Well, great. How many can you afford? How many can you comfortably invest in? If 1 contract is $2,500, well, 2 contracts is $5,000. Means 20 contract is $50,000. So on and so forth. So how much do you have to play with? Where everybody's different. Everybody has a different amount to work with. So here's my profit. Cost of the trade, including commissions and fees, $2,500. It's written right there. So how do we figure out what our rate of return is? Well, we're going to need the calculator for that. And I need my glasses to see the calculator. And it's not there. Okay, where's my calculator? All right, here we go. All right, first thing I want to do is put in the $68 profit. Now, to find out what your rate of return is, you take your profit, $68, and you divide it by your investment, $2,500. Basically the same thing if you're buying a house. You're buying a house, $250,000. Well, your max profit is going to be whatever it is. All right, 68 divided by the initial investment. Well, that's 2532. Okay, divide 2532 gives me a grand total of 2.6%. And I know 2.6% is not a lot of money. It's not. Seriously, it's not. So why bother doing it? Well, number one, it's simple. Number two, it's safe. Number three, it takes less than 5 minutes. Number four, it's predictable. Number five, I already said it's safe. Simple, safe, predictable. Okay, all that kind of nice, neat, fun stuff. That's why I do it. It's simple, it's safe. Now, and here's another thing. And once you do it every day, now, yes, this is something you got to do every day. Terribly sorry, you got to wash your hair every day. You got to brush your teeth every day. And guess what? Shampoo costs money. Toothpaste costs money. So why don't you take care of your money? Now, money's not the answer to everything. But here's the thing. Most people waste most of their lives chasing the dollar so they can live comfortably. Well, what if money wasn't an issue? What if you took whatever you're making now and put it into a situation where you had enough that you didn't have to worry about money? It's a total different approach to life. You get up when you feel like it. You go to work if you feel like it. Now, don't get me wrong, you have a lot of money, you don't have to go to work. But there's a lot of people out there that would go to work just for the joy of working. Isn't that a concept? Go to work because you want to, not because you have to. It's a huge burden lifting off your shoulder. Okay, so anyway, 2.6% for 1 week. Now, I got some questions rattling around in my head. Number one, does it make sense? If I buy Hormel at $25.42, I sell somebody the right, not selling the stock, I'm just selling them the right to buy it from me between now and next Friday. They don't have to if they don't want to. And guess what? This money here that they paid up front, they don't get to discount that from the purchase price. That is totally separate. That's like if you're standing in line, say, hey, can I cut in line? I'll give you $20. Well, great, take the $20, let them cut in line. What's the big deal? I'm buying a stock, $25.42. I'm selling it to someone else at $26, which is more money. And it's a 100-year-old company that's consistently profitable, bouncing off of the bottom of the year on the stock price. Because stocks go up until they're done going up, and then they go down until they hit a bottom, bounce off the bottom, and then go back up again. That's all they do. They go up and they go down. So this baby is at that low. Well, 2 weeks ago, it was at the bottom of the year. Now it's bouncing up and going back up again. Well, all it has to do, all it has to do is go up just, what is that, 68 cents? In order to be out of that position. But if it doesn't go up to 68 cents, what if it stays below 26 by next Friday? Big deal. Okay, let's get rid of this. I'll show you what a tragedy that's going to be. Delete that. Okay, so let's say hypothetically you don't sell it next week. It doesn't go up over 26 next week. Boo-hoo. Guess what? You get rid of the 19, that's gone. Now you're looking at the 26. It's next week. No matter what you do, you cannot avoid it. You cannot outrun it. Friday is coming. Friday's coming tomorrow. And guess what? When that is done, Friday's coming again. And when that one's done, guess what? Friday's coming again. You can't escape it. Tick tock, there ain't no way to outrun the clock. You just can't do it. Terribly sorry. So take what you have and put it to your favor. The clock is coming. Clock is ticking over and over and over again. I can do this week. Bingo, money. Next week, bingo, money. More money, money. Every single week. It takes 5 or 10 minutes a day. That's it. You spend more time planning weekend barbecue than you do in your personal finances. This was created for a 9-year-old. Now, I haven't shown her in a while, so let's go to the YouTube and bring up the princess. She hates that, by the way. I think all girls hate that. Don't call me a princess. I'm not a princess. That's what she keeps telling me. I said, well, terribly sorry, kiddo, but you're my princess, and you always will be. All right, so that's the website right there, the 10-Minute-Trader. No, not trying to sell you anything, so get that thought out of your head. What am I looking for? Oh, that's what I'm looking for right there. Okay, all my social media, Instagram, Twitter, blah, blah, blah. I want to go to YouTube because I want to show you the video of JC 15 years ago. Because we've been on this journey, me and her, for quite a while. Check this out. Look at this. 2 lives. One there, one there. So I'm actually, the screen you're looking at right here, as you can see, is live. Ooh. Whatever. I have to figure out how to use that thing. All right. What we want to do is go take a look at the videos, the oldest videos. And there she is right there. Let me pull it up. Uh-oh.
Which my dad like let me hold that. That's what I do. Hi, I'm Gracie, and as you being part of my internet website club thingy, which my dad says let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting.
All right, so that's the princess.
Stocks that you can choose from.
Here's me.
21 days in March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
Come on, you got to admit that's funny. Okay, I was in my 40s back then, and in trying to keep a 9-year-old entertained. Well, how do you do that? Well, it's got to be a very short attention span. That's why the whole strategy had to take less than 10 minutes a day. Because how are you going to hold her attention? Honey, did you brush your teeth? Did you take a shampoo? Did you take a shower? Okay, all that kind of nice stuff. Did you do your trades today? Simple. It's a simple. It's like going out and weed the garden. You know it's got to be done. You know you got to balance your checkbook. Okay, you know you got to go to work to make the money to pay your bills. So what's 5 or 10 minutes just to take a look? Where's my money? What is it doing? Where is it? Okay, if you give it to the banker, fine. The banker's going to give you a return on. He's going to invest it the way he thinks is best and give you what he thinks. Well, right now the bank is what offering 1.5% on a CD. Good luck with that one. Okay, give it to a money manager. What are they offering? 4% a year. Well, good luck with that one. Do it yourself. Learn to do it yourself. It's a simple strategy. Simple, safe, predictable, consistent. 1% per week. That's over 50% per year. Okay, at 100 grand, 50% is 50,000 or $1,000 a week. 10 minutes a day, that's less than an hour. An hour a week, $1,000? Yeah, why the hell not? It doesn't take that long. What did I buy? What did I sell? Where's it at now? What does it mean? What do I do next? Not that difficult. It's like go through door number 1. Now there's 2 other doors. Great. Now go through this door. Great. Now what do I do? It's actually that simple. They are very simple strategies. Number 1, never pick something that you don't want to own. Number 2, never sell at a loss. It just doesn't make sense. Number 3 boggles my mind. Make sure the company's consistently profitable. Now, from what you guys tell me every night, I look at that and I'm thinking to myself, what the hell is this person thinking? This company's not profitable. Why are you putting your money into a company that's not profitable? Boggles my mind. Now, I get it. I honestly do. I'm retired, so my point of view is different. I'm looking for safety, predictability, profitability. That's what I'm looking for. Because I don't want to go back to work. Not that I can't, I just don't want to. I've been working for 5 decades. I'm doing the economy a favor. I'm stepping back. Let the young bucks come in and do the work. I've done enough. That being said, why are you doing it? What are you looking to get? Is this the right place for you? It's slow, it's boring, it's monotonous, it drives you crazy. But it's also consistent, profitable, and safe. Depends on what you want. I want safety and profitability. That's what I want. Now, you're going to have a balance no matter what you do. Okay? Small return, little risk. Big return, big risk. 1%, very little return, very little risk. That's what I like. 5 to 10 minutes a day, I'm done. Get my 50% per year. Thank you very much. That's what I'm looking for. That's what I'm teaching. That's it. When you give me a stock that doesn't fit, I'm going to tell you it doesn't fit. So let's see, what else do you got? OPI, Calvin. OPI. What is OPI, Calvin? Let's get this over to there. OPI, you say. OPI. Hell no. Now, this is the part where I say, weren't you listening? Rule number 1, never buy something you don't understand. OPI, monthly. September, October, December, March. Those are months of the year. I can trade it once. 12 to 24% a year. Yeah, no, thank you. I prefer 50 to 100% per year. So no on OPI. That's a no. Next. What do we have next? Jordan, how are you? Bishop. Jello Nibbler, is that a desktop version? Yes, it is. No, I don't like the web version. Okay, I have tried the web version of Thinkorswim. I don't like it. K-Van wants to take a look at DVN, Divine Energy. Now, just to let you know, I do own some DVN in several of my accounts. I'm not trying to be biased. I just want to be upfront and let you know. So, first thing I'm looking for, 3 to 4 seconds. 3, 4 seconds. You ready? Here we go. High, low, where was it? Where is it? Down, up. That was hard, wasn't it? So it's not at the top. It's not at the high. See, I don't buy at the high. It just doesn't make sense. The high is when you're supposed to be selling, not buying. It's not at the bottom. It's not falling like a falling knife or a falling rock. No, it's somewhere between the high and somewhere between the low. So that part is fine. 3 to 4 seconds, all it takes. High, low, is, what's the direction? Simple. Don't make it more complicated. I found in my years that it's easier to teach children than it is to teach adults. Children don't have the bad habits that adults have. One of them being, nobody ever wants to say that they were wrong. Anyway, after I do that, 3 to 4 seconds, I want to go over here. And this shouldn't take that long either. See, I'll give me a quick test. You ready? The current price, $35.29. So I want 1%. So what's 1% of $35.29? What's 1% of 35? 35. 1% of $35 is 35 cents. You're just taking the decimal point and moving it over 2 places. That's it. It's that simple. 35 bucks, 35 cents. What's the 35 going for? 35 right here is going for 91. That's just a tiny bit below 3%. Well, hell yeah, why not, right? Okay, now we know that the chart's okay. Not perfect, but okay. We know the numbers are okay. So now we go back to the chart to see, is it the right time to buy? Because we don't want to buy as it's falling, and we don't want to buy when it's at the high. It doesn't make sense. So this is a 1 year. High, low, it wasn't. Now I want to fill in the numbers. What are the numbers? A year ago, 40.14. The high of the year, back in mid-November, 43.33. The low of the year, oh, that's in April. Second week in April, 25.94. Now, this is the 3-month chart. Okay, the last 90 days, last 3 months. Same exact thing. High, low, where was it? Where is it? What's it doing? It's going up. See, wasn't that difficult? We already checked the numbers. We don't need to see those again. Next, I want to look for a pattern. What is a repeatable pattern? Now, come on, you all know what it is. Okay, up, down, 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 up. It's not just the pattern. Look at the distance between them. So it's about a week. That's about a week. That's about a week. About a week, a little less than a week, about a week, about a week. Now she's going up. I'm looking for a distinct pattern. There it is. It's going up, but it's every week moving up and down, up and down, up and down. Finds a high, it drops. Finds a low, it goes up. Same thing over and over and over again. So now, once we get past this point, I want to go to the 30-day chart, the last 30 days. Because I get bills to get paid or come due every 30 days. So I want to see where to put my money so that I can pay my bills every 30 days. Okay, so today is the 11th. So we want to go a month ago, which would be 8/11, right there. Same exact thing. High, low. Where was it? Where is it? Up, down, up. That was tough, wasn't it? But what happened today? See, yesterday, she starts to go up, and today she comes down just a tiny bit. Now, overall, yeah, it's going up. See, it goes up, a little bit of profit taken, it goes up. What happened today? Don't know. But do you like the stock? Does it make sense? Do you know what they do? Is it something you want to buy and hold on to until it hits your target? Okay, so if I'm buying it tomorrow morning, $35.29, I got 2 choices. Sell the 35s or sell the 35.50s. The 35.50 is the closer. Okay, and that's paying 67, which is more than 2%. Does it make sense? Do I like this company? What am I looking for? 35.50. Well, can it hit it? Yeah. Where is it at now? 35.29. It's what? 21 cents off? That's not a whole hell of a lot. Can it hit 21 cents between now and next Friday? Yeah, it can. It can also go the back. Rewind. It can also go backwards. Okay? So, is it as safe as the 35s? Now remember, 35, 35.50, they're very close together. The stock's at 35.29. Now the 35 is a safer trade. 35.50 is a little bit more profitable, but the stock has to go up. The 35, it's a lower price, and the stock is already past that price, so it's okay to sell it for less because you're getting a higher premium, 91. Okay, so you deduct the 29 off of this. Well, what are you walking away with? You're walking away with more than 1%. It's just a math problem. ULTY. Why does people like ULTY? All right. Uh-oh. I'm missing a lot of questions. Right there, HRL, we already did that one. We already did that one. OPI, we already did that one. We already did that. DVM, we're on that right now. Okay, Van? Okay, so do I like it at 35? Let's find out. Let's get rid of this. Let's change this to that. The 35's right there. Just one contract. The market, here we go. And here it is. Alrighty then. Buy one, covered call, DVN, 100. That's the weekly. It's 26 September. That's next Friday. No, wait a minute. That's 2 Fridays away. The $35 call option, profit 64, investment 34. Let's find out what the ROI is. What's my rate of return for the week? 64 divide 34.36. 1.8%. Well, I like 1.8%. 1.8% every week is over 100% by the end of the year. Why not? Why not double your money every year safely and predictably if you like Devon Energy? Now, I'm not going to say you're going to do it every single week with this company. So I'm going to take this thing for a ride from where it is now, 35.29 to 35. Well, guess what? That's backwards. I'm still walking away with a profit. Do I care that it's not 2.5%? I'm getting 1.8, and the stock, 1.8. Stock doesn't have to do anything. It's just going to stay where it is or not drop too much. It's always a numbers game, and if you know how to play the numbers along with the charts, to tell you when, and you do the right safe strategy at the right time, it's like A, B, C, D, so on and so forth. It's not that difficult. We created for a 9-year. Do you remember paint by numbers? Okay, you get this outline of the squiggly lines and like numbers on it. 1, 2, 3, 7, 7, 4, 4, 1, 1, 5. 1 is red, 2 is blue, 3 is green, 3 is yellow, blah, blah, blah. And then you paint by the numbers. This is the same thing. Number 1, we pick a good stock. Number 2, we put into the calendar. Number 3, we look at the chart. Number 4, we look at the numbers. Number 5, we double check the chart to make sure it's right. Then number 6, we actually do the trade to see, does it work or does it not? Well, in this case, it's 1.8% for 1 week. That's if it's all cash. What if you do margin? Now, one of the tips I do give is don't do margin until you understand the risks involved. So the risks involved in margin is you're borrowing someone's money to play with. So if you drop in 100 grand, 50 grand, 20 grand, whatever it is, whatever you put into your account, the broker will ask you, do you want margin? And they will give you dollar for dollar. So if you put in 100 grand, they will put in 100 grand. Now you have $200,000 to play with. So if you're right, you make twice as much money. But you also have twice as much risk, plus you're borrowing that much, so you're paying interest on that. So don't do margin unless you understand the risks involved. And when you get really good and really confident and you're okay with it, then do it. So I've been doing it for 30 years, so I'm okay with it because I've been doing it for a while. If you're just getting started, don't do it until you get really good. The stock market's not going anywhere. It's been around for 400 years. Okay, 1602, the very first dividend stock was sold to the public. That's 400 years ago. It ain't going anywhere. Take your time. Make sure you're right. Don't make any unnecessary risks. That's just my take. That's just my opinion. Okay? You have so many other people, just like me, standing in front of the camera saying, hey, this is what I'm doing. What do you think? You either agree or you don't agree. Okay, you may say, yeah, he's right. That's great. That's awesome. But it's not enough for me. And 1% a week is not enough for a lot of people. And I don't expect this to be enough for everybody. But for those that want simple, safe, predictable, consistent, and almost no way to lose. Now, when I say no way to lose, what I'm talking about in that situation is I can't see a world where there's no more Coca-Cola, where McDonald's falls off the face of the planet. Companies that have been around, Bank of America, I don't see it disappearing. Wells Fargo, that ain't going anywhere. Some companies have been around for over 100 years. I don't see them disappearing. So when I say no way to lose, okay, the only way you are going to lose, listen very, very closely. The only way you can lose is by you consciously agreeing to sell it for less than what you paid for it. Okay? So if you buy something for $100 and you decide to sell it for 99, there's no one to blame but yourself. Just because the stock drops, you buy it at 100 and it drops down to 50, you didn't lose anything because you still own that one share. Whether you bought that one share at 100, now it's worth 50 cents, you still own it. Until you decide, you know what, I'm going to take the loss on it and I'm going to move on. That is the decision only you can make. So there is no way to lose unless you consciously agree to take the loss. That's it. So let's keep progressing. Who has up next? Oh, take a look. Kroger. Bishop wants to take a look at Kroger. So let's take a look at Kroger. Kroger. All right, back to ground zero. Here we go. Kroger. Now, Kroger came to me from Warren Buffett, because Kroger was not originally on my list. Okay, when I took a look at over Warren Buffett's shoulder, he had a few stocks I didn't have. So I said, all right, if this is good enough for Warren Buffett, I'm going to do it too. So I like Kroger. Let's take a look. Very first thing I'm looking at. You ready? The high, the low. Where was it? Where is it? Look at this. Up, down, up. That was pretty simple, wasn't it? It's not at an all-time high. It's not falling like a rock. So yeah, step two, what's the numbers? What's it going? What's it at right now? 67.23. Well, if I'm buying it at 67.23, the 67 is going for 120. That works. The 68 is going for 91. That works. Either one, because you're kind of somewhere in the middle between the two. So pick which one you like. The 67 is safer. The 68 is a little bit more profitable, but the stock has to go up. It's a trade-off. Okay, so look at the chart. Let's look at the chart. Okay, a year ago, 51.77 was the low of the year, and she shoots up to the high just recently at 74.69. Now, from the 30-day high here, she gaps down, retraces, comes back down, back up, back down. Now today she shoots up. It's the bottom and it's a top. I like 2 days to the bottom before I jump into anything. Today could be the 30-day bottom. Could be. We don't know yet because we don't have anything to compare it to. So until tomorrow shows up right here, then we'll know for sure whether today is lower and tomorrow she starts going back up again. Because in all fairness, she could keep going down. It's in a downward trend at the moment. But it's going to keep going down until it's done. Isn't that strange? It goes down until it's done. That's like when you're baking cookies. How do you know they're done? When they're done. When you're making a burger. You want it medium rare, well done, medium well. You'll know it's done when it's done. So it's coming down. Here's the bottom. Or is it? Tomorrow might be lower, might be higher. Wait, be patient. Wait for it to find the bottom, turn around, go back up. See? Comes down, finds the bottom, turns around, goes back up. Comes down, finds the bottom, turns around, goes back up. That's what they do over and over and over and over again. If you're expecting it to come to your house and cook you dinner and take the dog for a walk, it ain't happening. They go up, they go down, that's it, that's all. Next. Seaweed spinner, Coles. Wait a minute, BTI. British Tobacco. Wait a second, I missed some questions. Yep, hold on. Missed a lot of questions. All right, let's chill for a bit and look at some questions because they keep coming and I can't keep answering all of them. To be fair, Bank of America came very close to bankruptcy in 2008. I can definitely imagine a world without Bank of America. Dylan, I'm going to agree with you. Okay? I have no problem whatsoever seeing it go bye-bye. All right, anyway, next question. Oops. Come on. There we go. Where are we? No, okay, there we are right there. Coles. Okay. What's the topic right now? Cherie, the topic right now is investing for simple, safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks, and those are companies that consistently aren't profitable for a minimum of 20 consecutive years. Doing a safe, predictable trading strategy gets you a simple, safe 1% per week. That's over 50% per year. Hope that explained it. Less than a minute. Pretty good. Revold, N-I-O. What the heck is N-I-O? N-I-O. Noi Inc. Never heard of them. So if I've never heard of them, let's go to Yahoo Finance. Let's get rid of this. Get rid of that. N-I-O. N-I-O. Now, I tell everybody if you're going to be investing, you need to have at your fingertips access to a financial website. Now, Revolt, I'm not quite sure why you didn't get the memo, but this thing has no dividends. So what do you want me to do? Take a look at 20 years worth of quarterly reports to see if this thing's profitable or not? Yeah, no thank you. Okay, I can't do that. There's 10,371 different companies out there. I'm not going to read quarterly reports for every single one. Either they're profitable or they're not profitable. Okay, either they pay out dividends or they don't. Okay, why would I invest in a company that doesn't share their profits? It doesn't align with what I'm looking for. I'm looking for cash flow on a weekly basis. Can't get that here. Kate Will Spinner wants to take a look at Coles. Now, I actually had some Coles. They had a big jump up and they got taken away from me. All right, don't feel sad for me. I made money off the deal. Okay. So take a look at what Coles did just recently. The 11th, somewhere around there. Okay. She shoots up. Now she's coming back down again. See that? There's the top right here. Now she's coming down. 4 days coming down. So it's going to keep coming down until it's done. But somebody still took the Coles away from me. I'm okay. Wait for it to drop back down again. When it finds the bottom, does this thing again. Find the bottom, turn around, go back up. Then I'll jump in again. I watch Coles every single week because I've been playing with it for the last 2 or 3 years. And it's consistently giving me a nice profit every single week. And when it's done giving me profits, fine, I'll give it a rest. And then when it's back in position again, I'll jump in and buy some more. Next, BTI. What the heck is BTI? BT Bachman Turner Overdrive. No. Hell no. Okay, who came out with BTI? Tarheely. Okay, Tarheely, I don't do monthlies. September, October, December, January. No, I don't do monthlies. The numbers just don't work. Alrighty? No. Jello Nibbler, alrighty. Curo Oncology. Ashley, are you sure you want me to take a look at that? Number one. Number two, you got to give me the ticker symbol. I've never heard of that company, so more than likely it's going to be a no. But I'll take a look at it and give you my opinion. for you nosy MF. Cool beans. Hippie girl. Can't see the side of the graph. Whoops, wrong way. All right, that's about the best I can do. Which stock so I can look it up? BTI. Now, I'm going to apologize now that I'm a little slow on these because I get so many questions popping up. You're going to ask a question, and it's going to take me 4, 5, 10, 15 minutes to get to it. Sorry. MG, robots. That's not a ticker symbol. Neither is Tanya. Black Dynamite Fenny. So you do one contract with multiple companies. No. I'm showing you one contract so you can understand the correlation between one contract, 7 contracts, 23 contracts, whatever. Everybody has a different amount to play with. So if I show you what one is, well, you can equate, well, I have this much money, and if one is this much, well, I can afford to do 33 of these. Okay? It depends how much money you have at your disposal. Oh, Jello Nibbler, thank you. That's an awesome answer. One less thing I need to do. Thank you. May have more than him. There you go. It's guaranteed. Okay, Kelwell Spinner, I have no idea what you mean by that. It's guaranteed. No idea. It's fun making money. Yay, Jeff. Raya, hi. Keep on keeping on. What do we have there? Scarecrow, thank you. Jokester, take profits. Hey, I don't blame you. Run for the hills, Crunkled. How are you doing today, brother? All righty. Terry Smith. Terry, you've been here for a while, dude. You have. And now I'm ashamed that you've been here for a while and you're asking me about SMCI. SMC. I'll take a look at it for you. Okay. There it is. High, low. Where was it? Where is it? Look at the movement. Look at this right here. It looks good right there. Okay. But let's go and take a look at how consistently profitable they are and how are the dividends looking? SMCI. So, Yahoo Finance. Okay. There it is right there. Super Micro Computers, SMCI. There are no dividends. Why are we looking at it? Okay, you've been here for a while, dude. You know that. Mike Sweeney, back again. How are you today? Scott, what do you do when a stock drops and the weekly premium is minimal? I'll give you I tell you my cow story. Okay, Scott, here's my cow story. I go out and buy a cow, and the cow gives me a gallon of milk every single week, week after week after week. And I go there one day, and he gives me a half a gallon. Do I get rid of my cow because it gave me a half a gallon of milk? No. What if she only gave me a quart or a pint? Do I get rid of it? No. I like the cow. It's been consistent for a while. Is it going to give me a gallon again at some point? Yes, it will. Because, even cows get under the weather once in a while, and they don't perform it like they used to. It's the same thing, okay? If the stock is giving me a nice premium every single week and the stock drops, I lower my strike price just a little bit so I can have some come in, even if it's minimal. Because you got to remember one thing, Scott. Well, a few things you got to remember. But this one thing is, most people, before they even knew about weekly options, getting weekly cash flow, were perfectly okay with buying a stock and collecting a collecting a dividend once every 90 days. And they're perfectly okay with that. Well, now you still get the dividend every 90 days, but you also get that minimum weekly payment. And what's wrong with that? Because you just add it to the kitty and it just keeps compounding. Even if it's a small amount, like 0.25%, 0.5%. Okay? So every single week it compounds higher and higher and higher. What was that last stick before OPI? Was it Marvel? No, it wasn't Marvel. Zach, ATYR. Now, Zach, I feel bad about putting that in here because I've never even heard of it. ATYR. ATYR. A tire. Okay, Farmer Inc. Again, when I say make sure you know what it is you're buying. Okay, so if this is a dividend channel, talking about dividend stocks and investing in dividend stocks for weekly cash flow, it still has that word dividend in it. And this thing has no dividends, so why are we looking at it? Never buy something you don't understand, Zach. If you understood ATYR, then you would know ATYR doesn't have any dividends. So it would be pointless. Hey, Victoria! It would be pointless to invest in it, in my humble opinion. Thank you, Victoria. Oh, Victoria, that was so sweet of you. Can't see the side of the graph. We already did that one. Blah, 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 blah. All right, take profit. We did that one. Yep, we did that one. BTI, we already did that one. It was a no. Mike Sweeney. Ah! Thank you, Victoria. Okay, what am I doing? SMCI, we already did that one. British, we did that one. What was the last stock? Yep, we did that one. ATYR, we did that, we did that, we did that. Alfred, all alive. Thank you there, Alfred. We already did Hormel. Okay, which stock was that? I think he said it was Hormel. Stock, blah, 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 blah. What is the name? Hormel. 1.8% for 2 weeks. Was that 2 weeks or was that 1 week? I don't remember. Hey! All right. Raya, how you doing? Christopher, I'm going to agree with you. No. On Kroger, that's actually a plus cog, so it's a reversed uptrend. Thank you, Terry. I mean, I did not teach the 9-year-old any of those fancy little terms, you know, the teacup, double shoulders, the ascending pennant, the descending. Yeah, no, I didn't do that. EPR and O are some of the ones I own. Okay. Hi, Dre. How are you doing today? O is a monthly optional stock. That's an absolute no. EPR, never heard of it, so let's check it out. EPR. EPR Properties. Oh, there's the dividends. Check that out. Cool beans. Oh, nice. 2010. Ooh, look at that. Now, I have to admit, I have no idea who they are before I get all excited, because O Realty is a monthly. Is EPR monthly also? EPR. What a bummer. Imagine, I was getting excited because I saw the dividends kept increasing. Well, great, it's a monthly. I don't do monthlies. And the reason why I don't do monthlies is they're just not as profitable. Okay, September, October, December, January. Current price is 56. Well, let me show you. I like showing this to the monthly people because they say, oh, I get it. Okay, so 30 days from today, the current stock price at this moment in time is 56.60. The closest strike price is going to be the 55, and it's paying $2.25. Okay, well, if I buy it at 56.60 and I sell it at 55, I'm losing $1.60. So I got to take that $1.60 out of the equation somewhere. So I take it out right here. Now I'm walking away with 65 cents to hold this thing for 5 weeks. Now 65 cents on a $55 stock, or $55 stock, is barely over 1%. For 5 weeks. But hold it, that's not the worst part. That's just part of the worst part. Here's where it gets worse. You ready? This here is 30 days. Okay? 30 days ago today. Okay, the stock went down, it went up, it went down, it went up, it went down, it went up. Great. Now tell me, where is it going to be 30 days from today? Okay, it's challenging enough to try to figure out where it's going to be in 5 days when you do a weekly option. Trying to figure out where this is going to be in 30 days, well, I'm going to say no thank you. Besides, it's giving me a horrible return. Little over 1% for 5 weeks. Yep, no thank you. I don't do monthlies. The numbers just don't work. Okay? EPR and O are both no. Simple, right? I wish my dad did this for me. You say that now, okay? Who said that? Sam Bam. Okay, you wish your dad did it for you. That's what you're saying now as an adult. But as a 9-year-old, well, she volunteered, number one, saying, can you teach me? Yes, she volunteered. But being forced to do it, yeah, it's not as much fun. Because my boys had no interest whatsoever. Clueless. And that's the fault of us Gen Xers. Because we made so much money that we gave our children everything and we tried to protect them from everything. Well, we made a bunch of soft pussies. What we did. Just my opinion. Okay? I have no idea what any one of my boys would do if they were confronted against, a bear, so to speak. All right. Dan B, how are you? All righty. Okay, we're going over to here to check questions over here. Al, he's buying 100 shares to sell the call, blah, blah, blah. You have to begin with DND. Oh, wait a minute, DDN. Did not know. Okay, I don't know idea. Okay, DDN. Okay, is it a stock? Well, let's find out. DDN. Apparently it is. And it's a no is what it is. Steve, yep, got it. Did you find it? I didn't find it. Follow blah, blah, blah. DVN. Okay, 5 rules are fire, follow them, and win, period. Steve, I love the idea of fire. Really, I honestly do. Now, I don't know of any fire strategy that pays 50% per year. I really honestly don't. I think it's a great strategy for those that like it. Okay, for somebody like me, it doesn't work. Okay, I don't have 2 incomes, and I don't make $50,000, $60,000, $100,000 a year when I was working. Oh, thank you, Victoria. Yay. So, yeah, the fire thing does work for some people. But what are the results that they're bringing? Dan B, we already looked at Kroger. Marky B, good evening. I'm 61 and learning a lot. Thank you. You're welcome there, sir. VOO, Marquis wants to take a look at VOO. Now, most people like VOO. I don't. Now, let me explain to you why I don't. It's at the absolute high at the moment. I don't buy anything at the high. It just doesn't make sense. But hold on, because it gets kind of worse than that. So let's go over to Yahoo Finance and see the numbers for VOO. And then you tell me, does that sound like a logical place to put your money? Okay, $604 per share. Okay, we got dividends all the way back until 2010. The very first dividend, 2010. What does that mean? Well, it means it's only 15 years old. Now, don't get me wrong, 15 years is kind of nice. But is it a company that you like? Well, let's see how profitable consistently is VOO. Because you cannot hide from the numbers. The numbers are either going to get higher or they're not. So let's find out. You ready? 2010, 15 years ago. 55, well, that's not bad. 52, right off the bat, turned me off. The second dividend, not the first. The first dividend, nothing to compare it to. The second is lower than the first. That's not a good start. The first start should be higher, not lower. Okay, let them slide. Okay, hold on. 55, 52, that's down once. 53, 57, 58, 68. Good so far. 57, that's backwards. That's twice. 64, 68, 94. December 12. All right, right there, 94. 67, that's 3 times backwards. 73, 78, 91, 77, that's 4 times. 80, 87, 98, 90, 5 times. Do you see the pattern here? It goes up 3 years, it goes down 1 year. It goes up 2 years, it goes down 1 year. It goes up 5 years, it goes down 2 years. Or 2 months, or whatever it is. Up, down, no consistency whatsoever. Terribly sorry. You like VOO? Hey, you do it. You do you if you're okay with it. I don't like VOO. Let's look at something else on VOO. All right, just for the fun of it, sit tight. We'll see exactly how good it is. Now we're going to go to the summary page. That gives us an idea of how the consistency looks. Okay, who was it again? Marky B. You see this Marky B, the yield? Do you see that number? You know when you get a dividend, not a dividend, a CD? You got a CD, great, 1.5% yield. That's 1.5%. 1.5% for the year. So they have these CDs like 4% for 3 years. Well, that's still a little over 1% per year. Well, look at this thing. 1.1% per year. Now, I'm showing you 1% per week. That's 50% per year. So if I put in 100 grand, 1% a week, that's a $50,000 profit. You put in 100 grand, you're getting 1.17%. You're getting 117 bucks. I'm getting 50 grand, you're getting 117. You tell me, is that a good deal? I might be wrong with those numbers, but still, 1.1% of 100 grand. No, it's probably 1,100 bucks. Probably, yeah, it is 1,100 bucks. But still, 1% a week is 50,000. 1.1% a year is 1,100. If you started out with 100 grand. So you like VOO, hey, if you got that much money that you can live comfortably off of 1.1% per year, hey, more power to you. All I know is I can't live comfortably on 1.17% per year. Hey, Doug has dividend stocks. Dan B, sorry, thank you. He only does stocks that have dividends. Thank you, Dan B. Al, so you have to buy 100 shares. So you need some cash. Now, Al, you could do what is called dividend capturing 2.0, where you just relying on the dividend itself and the upward trend of the stock. Because most stocks that have dividends have a tendency to go up just before the EX date. What the hell is that? An ad popping up on YouTube? Not YouTube, what the hell is this? Yahoo Finance. Alrighty. Dan V wants to take a look at Merck, MRK. Now, I do have some Merck in one of my accounts, just to let you know. First thing I'm looking at, the high, the low, where was it, where is it? Look at this, down, sideways. Is that easy or what? Down, sideways for the year. The bottom is right here. Hey, here's the top, down. All right, so down, then up. All right, same thing, down, sideways, about the same. What the numbers look like. 85.15. The closest strike price is going to be the 85. Right there, 85. It's going for 185. Now, right off the top of your head, you should think $85. Well, 1% is 85 cents. Well, it's offering 185 per share. Well, that's over 2%. Do you like 2%? I love 2% a week. But, wait a minute. That's out 2 weeks. I don't want to go out 2 weeks. I want to go out 1 week. Someone pointed out I missed it. 19th, there we go. The 85, 142. All right, so a 1.5%. Okay, the 85, 1.5% for 1 week. Doesn't make sense. Ooh. All right, that being said, let's go a little bit deeper. You ready? Because the numbers work, the chart works. Let's see what the rate of return would be if I like Merck, if the chart tells me it's the right time. So let's zoom in. First thing I want to see, what was it a year ago? 115. The high of the year, 119. And that was the middle of September last year. Bottomed out right here in May, 73.41. But look, the last 3 months, the last 90 days. The high, the low, where was it? Where is it? Down, up, down, up, down, up. Simple. Don't overcomplicate it. It's not brain surgery. It's just trading stocks. You find, you know what? If that's too difficult for you, do this right here. Line chart. Red means it's coming down. Green means it's going up if you're having a difficult time. See? Up, down, up, down, up, down, up, down, up. Same thing. It's just, how do you read better? Do you read line chart better? Do you read the candlesticks better? Hold on, it's candles. Candlesticks or line chart? Bar chart, sorry. Bar chart. Same thing. Down, up, down, up, down, up, down, up. Same thing. They all showing the same thing. What is easiest for you to read? Okay? So I want to go back to candles. And I want to do the last 30 days. All right, I got to get this thing out of my way. There we go. That works. All right, so the last 30 days. Same thing we're looking for. 5 things. The high, the low, where was it? Where is it? Up, down, sideways. That's what we're looking for. Where does it look like it's going next? Well, it looks like it's going up slowly. Well, that's fine by me, especially if I'm buying it at 85, selling it at 85, picking up 1.5%. Let's see what it looks like. All right. Let's get rid of this. Here. Covered call, the 85 right there. Just one contract works for me. At the market, there we go. Click confirm and send. Here's what it sounds like. Read it out loud so it makes sense. Ow. Ooh, I got some questions over here. James just got access to my Thinkorswim. Yay, James! Francis, is that always a chart previous 12 months behind you before you decide to zoom in? Yes. Thinkorswim's preset is 1 year. Okay? You can change the presets if you want. You pull it up. I like 1 year chart, 90-day chart, 30-day chart. It gives me what I'm looking for. And remember, I had to make it simple for a 9-year-old. Okay? Okay, so here's the order. I always encourage people, read it out loud, make sure it makes sense. Buy 1, covered call, Merck, MRK. 100, that's the weekly. 19 September 25, that is this. Not this, that's tomorrow. Next Friday. Victoria, thank you again. Yay! Next Friday. Okay, so if I'm buying it today, tomorrow morning, I'm selling somebody the rights to buy it from me for less than what I paid for it. Can you imagine that? The stock is in an upward trend. It's going up. Okay? Okay, it's a dividend company, means they increase their dividends every year. Oh, good. If I sell an option, I'm 80% chance of being right because 80% of all options expire worthless. If the numbers work, the numbers work. It's a simple yes, no question. But then it comes back to that nagging question. Do I like this company? Do I want to own this company? And I can't tell you. Nobody can tell you but you. You are the only one who can decide what is right for you. Okay, so if I like Merck, great, wonderful. Here it is right here. The stock doesn't have to move at all. It's already at 85.15. My strike price, my goal, my target that I'm aiming for is 85. What are the chances of it being 85 or above by next Friday? It's already at 85.15 and it's in an upward trend. That doesn't mean it can't drop. Doesn't mean that at all. Just the odds and probabilities are currently in my favor. Okay? But we all know Murphy's Law, yeah, it could drop. But if it could drop, you have to understand that before going in. And are you okay with that? Because you're investing, you're an investor. You know there is a chance that you could lose money. That's the risk. And if you don't do it, your money's going to slowly deteriorate. You have no choice in the matter. And that's difficult for a lot of people to grasp. You have choices in life. Sometimes you have no choice. Okay? So here's a perfect example. Back at the turn of the century, the 1900s, there was a company out there that made the best buggy whips in the world. Everybody traveled all around to buy one of these buggy whips. Well, guess what? They don't have that many horse and carriages on the roads anymore. So that company ain't really that good anymore, now is it? What about the 45, the records? Remember that? Used to go hang out with friends, listen to some records. Let's spin some 45s, have some fun. I used to remember loving playing those RKO radios, the RKO albums. Remember you get them on, they used to advertise them on K-Tel Records. Okay? If you don't know K-Tel Records, you should look it up. Always the best song of all these artists. And there was a bunch of them, 30, 40 songs of the best songs of that time. And we just sit there and we listen to all these great songs. Well, that's no longer here. Okay? That is gone. The cassette player, that is gone. The 8-track player, that is gone. The reel-to-reel. Okay, as technology progresses, you have no choice in the matter. And I'm terribly sorry if you don't like that. Well, guess what? There's more technology that's coming. Whether you like it or not, whether you agree with it or not, you have no choice in the matter. And it's hard for some people to accept. You either go with the flow or you go back to the Amish ways. There's nothing wrong with it. I mean, they are perfectly happy doing what they're doing. You can decide to do whatever you want if you're okay with the trade-offs. Well, that's not enough of that stuff. So, Mark, you either like it or you don't like it. Here's the trade right there. Here's the profit, 122. Here's the investment, 83.78. Let's see what the rate of return is. Okay, calculator. 122 is the profit. Well, what is the investment? 83.78. 83.78 comes to a grand total of 1.45. That's not bad for 1 week. 1.45 by the end of the year, you're looking well over 75% per year, or close to it, somewhere in that area. Does it make sense? Does it sound like something you can do? It's all simple. If I'm buying it at 85.15, I'm selling it at 85, well, that's a safe trade. And I'm making 1.45%, and the stock doesn't have to do a damn thing. Stay exactly where it is, even come down a little bit. Goes up, I win. Stays the same, I win. Comes down a tiny bit, I still win. What I'm looking for, simple, safe, predictable, consistent 1% per week. Don't care how I get it. I want to be safe, and I want to be secure, and I want that income to be consistent. That's what I'm looking for. Okay, so I have done over 1,100 videos. You can go to my website, okay, wherever you are, whatever platform you're listening on. Every single one has a spot in the bio where you can do research on me and my company. Go ahead. I invite you to take a look. I've been online for over 20 years. I'm not hiding from anything. I'm not a fly-by-night kind of guy. Okay, my very first blog post was in 2011. Only because that's when it first became available to me. Okay, my very first video was a couple years later because that's when it became available. See, I'm live now because that's when it became available. Now, this is going to do nothing but expand because we're going to television next, and we're live on 9 stations or 9 channels. Well, we're going to be expanding that pretty soon because I believe this is important information that people should know. There are alternatives. Okay, you think one way, well, that is great, and there's nothing wrong with that. Okay, it's okay to be oblivious. Okay, to be ignorant. Some people hate that word, but there's nothing wrong with being ignorant. It just means you don't know something. It's not good or bad. It just means you don't know something. And the funny thing is, there's probably a bunch of things I said tonight that you didn't know before you came here. Well, guess what? Me personally, the reason I'm doing this, I think it's a crime and it's a very disservice for me not to share my information before I go on the next adventure. I have no idea what it's going to be. What's on the other side? I have no idea. But it wouldn't be fair to me or humanity to take everything I've learned over the years and just take it with me. That's selfish. I want to keep it here. I want to give it to my children and my grandchildren. That's what this video is for my children and grandchildren. So when I'm gone, they can see that they're not getting any money from grandpa unless they can prove to the executor of the estate that they know how to handle money and they know what to do with it. So boo-hoo for you guys. You have to learn, not talking to you, this is to my children, my grandchildren, Boo-hoo to you guys. You got to learn how to be responsible with money before you get any of it. Okay? They don't know this yet, but in my estate, in my will, in the corporation, which I'm leaving behind for them, they can do whatever they want, but they don't have any access into that money until they can prove, beyond a shadow of a doubt, that they can do it also. I didn't go through everything I went through for the last 20 some odd years, and it wasn't easy. It wasn't fun. Okay, it is what it is. It got me to where I am. Okay, great. I'm passing along to my kids and my grandkids. Great. You want to have a good life? You have a wonderful life? You want money to be one less thing to worry? That's all it is. One less thing to worry about. Remember that scene in Forrest Gump where he says, well, we bought this fruit company. Now I have so much money, I don't have to worry about money anymore. And Forrest Gump says, good. One less thing to worry about. That's all it is. If money was an object, what would you do? Now, some of you would go to work because you enjoy working. Some of you would do whatever you wanted to do, but contribute to society. And so, all right, let's get off track. Let's get back to the stocks. That was Merck. Let's keep on going. AXP, American Express. Gotta love it. All righty. AXP. Yes, AXP is on the list. Uh-oh, wrong number. AXP. There we go. Well, you know what we're looking for. High, low, where was it? Where is it? Up, down, up. We're going to say no only because it's playing around at the high. And now, see, I want to buy it the low, take it up. See, it goes up, pulls back. I want to buy it there. Up, pulls back, buy it there. Up, pull back, buy it there. Up, pull back, buy it there. This is where I want to get. I don't want to get at the high. I don't want to disillusion you, thinking that I know how to pick this. No, I don't. Okay, let me zoom in and show you what I'm looking for. Okay, I'm looking for 30-day high, 30-day bottom. That's what I'm looking for. Because at a 30-day high, most people take profits and it comes down, and then it finds the bottom. Now, I'm not going to tell you I'm looking for the bottom and I find the bottom. No, I don't. I find the bottom right here. I look for 2 days to the upside. And then on the third day, I jump in. That's my rule for me. You have to figure out what works for you. So here's a 30-day high, 30-day bottom. Okay, 1, 2, 3. Here's where I jump in right there. And I take the ride the rest of the way up. That's what I'm looking for. Simple, safe, predictable, consistent. And then I never want to buy something I don't want to own. I got no problem buying American Express. Don't leave home without it. All right, anyway. Questions? Terry, yep, you should have known that one, Terry. I take that. All right. Hey, Bamatic. Dude, I tried to call you today. Your phone number went nowhere. Okay, now when people send me their phone number, I call them. I do. Okay, now we're getting ready to set up with a Calendly. That's a calendar where you can actually go in and schedule a time to chat with me. Now, granted, I'm only going to talk for like about 2 hours. That's about it. Okay, I'm going to give you 2 hours. So you want to put a call in there? Yeah, I'll give you a buzz. CTRA. What the heck is CTRA? Oh, so anyway, by the way, American Express, that's a no. Look, down, up, down. It's coming down at the moment. See, yeah, no, thank you. I don't like buying as it's dropping. But, however, okay, bottom shoots up, comes down. As soon as it finds the bottom, turns around, goes back up, that's where I want to jump in. Plain, simple, okay? All right, next. CTRA. CTRA. Interesting. I'm looking for the same thing all the time. It's the same thing over and over and over again. And the nice thing about it, it takes 3 to 4 seconds. Okay, quick, high, low, where was it, where's it going? Okay, great. It actually fits. It's not an automatic no. And you'll be able to see them. Automatic no. Hell no. Dropping like a rock. No. At the high of the year. No. It's simple. Don't make it more complicated. All right, so 27.37 to 24. 24.37 to 24.50 to go for 30 cents. That's more than 1%. That's a yes. Let's take a look at the chart. What do the numbers look like? A year ago was the bottom of the year, 22.30. Okay, mid-January, she's at $29.90. Let's call it 30. Okay, so she goes from 20 to 28 to 30. It's an $8 increase in 4 months. Okay, down, up, down, up. The last 90 days, right about here. Okay, the high, the low, where was it? Where is it? Down, sideways. That's about all it did. The last 30 days. What does that look like? Same thing. High, low, was, is, down, up, down, up. Plain to see. Once you got down to the last 30 days, it's easier to see where it's going next. And it's pretty simple. Up, down, up. It's actually that simple. So it's going up. Great. What does the 2450s look like? Let's get rid of this. Change this to this. Covered stock. There you go. 2450. There it is. One contract right there. Market, there it is. Here we go. Here's Johnny. Buy one. Covered call CTRA 100, 19 September. That's next Friday. The $24.50 call option against the stock at the market to open to open. 45.50 is the profit. 2,400 is the investment. Think of it as a gumball machine, soda machine, candy machine, vending machine, whatever. What is it costing you? Well, this vending machine is costing me $2,400. This vending machine is giving me weekly cash flow every single week that I pay attention to it. You stop paying attention to it, it's going to stop giving you money. Oh, that's pretty evident, isn't it? Okay, so calculator. Profit $45.50. The investment in this one scenario, $24.05. Divide 24.05. 1.89%. I'm only looking for 1%. 1% on a weekly basis is over 50% per year. It's a simple trading strategy designed for a 9-year-old. Let's take a look at some more questions. Get a little bit comfortable. All right, what do we got? Azriel, good evening. Thank you. What actually makes, that actually makes sense. Thanks, Bingo. Trey, hi, Dre, how you doing, Dre? Facts. This generation is soft. Oh, Victoria Duke, how are you this evening? All right. Cuxter, my paper money has been profiting from what I'm learning. Thank you. Cuxter, always practice before you put any real money into it. Once you'll know when you're ready. Seriously, you keep doing paper money, virtual trading over and over and over again, you're going to have a nagging voice in the back of your head. You're not hearing it now, but the more you do it, the more you confirm that you can do it. And the more it makes sense and the more consistent you are, the voice in your back and your head, real money, real money, real money. You'll know when you're ready. Don't ever push it. Learn what you need to learn and then start out slow. Stock market's been around for 400 years. It ain't going anywhere. You're not missing out on anything. Jackster, was that right? That's his name? Oh, there we go. Jackson, depending on client profiles, why not FIA with higher yields, income riders plus tax deferral? Okay, dude, you want to get complicated? Hey, I'm all for it. However, you're missing a very, very, very important fact, Mr. Jackson. The trading strategy I'm showing you was specifically designed for a 9-year-old. Okay, once you perfect that simple trading strategy, 50% per year, great. Then come back to me and ask about more complicated stuff. Okay, because it's going to be a trade-off. The more time and effort you put into it, you should expect higher returns. But also remember, more time and effort is going to require more knowledge. More knowledge, well, then you're taking time away from what you want to do. So it's a balance there somewhere, Jackson. No, you're right with what you're saying, okay? But it wasn't proper, or it wasn't the right curriculum for a 9-year-old, Always keep that in mind. Simple, safe, predictable, consistent. No way for her to lose. All right, fine. Those were the rules. Those are the criteria. Well, you're older than 9 years old, so let's figure out how it's going to work for you. But keep the broad outlines in mind. Okay, that's the five rules: simple, safe, predictable, consistent. No way to lose. That's simple. Now you want to add more stuff to it. Okay, it's going to get more complicated. You're going to need more time and effort, which means now you're going to require more rate of return. Well, more rate of return, more risk. It goes hand in hand. You cannot have one without the other. So for me, I am perfectly, and I have a hard time understanding why people don't get this. When I say I'm perfectly okay with 1% a week, I have no desire to look at anything else. Because 5 or 10 minutes a day, I can do that easily. 5 or 10 different stocks, not a problem. 1%, that's 50% per year. Okay, I'm done with the greed in my life. I'm done with trying to keep up with the Joneses. I really don't care you have a new car. I have a car that's from 1999. I don't care. I get in, start it up, and it drives. I don't care. Seriously, I don't. Okay? So no, I don't have to have a brand new car every year. I don't have to live on the water because I don't want to. I have no desire. I'm perfectly happy where I am. Okay? So let's keep on going. Keep that in mind though, Jackson. Okay, you're right with what you're saying. Okay. John Odino. John, that's funny. Odino. 5 dividend stocks. Oh, you ready? Macy's, Kohl's, Nordstrom, Stop and Shop, and Kroger. That's 5. I got a whole bunch more. Donald, AGNC. Now, I think AGNC could be one of those ones I don't like. I think it could be AGNC. Is it? I think so. My glasses. Yeah. Okay. The reason why I don't like AGNC, do you see this right here? Okay. If it's at 1023. The 1050 is going for 3 cents. No, that ain't happy at all. But then look at the next one. 0, 0. Okay. You got to take into consideration what are the options, premiums that are being available. Well, if they're horrible looking down the line, then if you're wrong, you're not going to get any money. So AGNC, just like Energy Transfer, ET. Well, no, the numbers on the premiums are horrible. Jackson, maybe because they are not highly liquid and can have surrender charges for early withdrawal. Jeff, thank you for that. I didn't know that, Jeff, but here's the reason why I didn't know that, Jeff. It has nothing to do with me, okay? So I admit freely, I honestly do. This platform here, I've been using it for 20 years. I know about 2 to 3% of what's in this platform. 2 or 3%, that means 98, 97%. I have no clue what it is because it doesn't make any difference to me. That's like when I go shopping for a pair of work boots, I don't look at ballerina shoes. I don't look at flip-flops because that's not what I'm looking for. I'm looking for simple, safe, predictable, consistent stocks. And if that's not it, I have no desire to look at it. Okay, so what I'm looking at on the platform is very specific. I want to look at the calendar. I want to look at the options. I want to look at this. I want to look at that. And that's it. I don't need to see anything else. Okay, it's like when you drive a car. Do you really know what the proper compression ratio is on each and every cylinder? On load and not on load, with the turbocharger and with not the turbocharger, with leaded gas and with unleaded gas? No, you don't need to know that. All you need to know, you put the key in, turn the key in, and you go. That's all you need to know. You don't need to know everything. That makes sense that you don't need to know everything to be consistently profitable. Just something that's simple and predictable. What else we have? What is that stock? AGNC, it's a no is what it is. That's why, depending on client suitability, but there are annuities actually with no CSDC. I have no idea what CSDC means, Jackson, number 1. Number 2, I really don't need to know. Number 3, I don't do annuities because you have no control over them, and I've never seen an annuity pay 40 or 50% per year. Never. If there is one, I'm more than happy to take a look at it. Because if I can give my money to someone else and they will give me 50% every single year and I have to do absolutely nothing, I'm all for it. if you don't know anyone that pays 50% per year, then I'd rather just do it myself. R7 Yamalas. Okay. Irina, how are you? Rev Rod, how are you doing? Jessica, good evening. Chris. Felix, Rolodex is also gone. She's right. Rolodex is also gone. Okay, I used to have a Rolodex. And when the FBI came to raid your office, the very first thing they took was your Rolodex. Nowadays, it's your iPhone, it's your computer, it's your hard drive. That's the first thing they go for. But in the 60s, 70s, and 80s, the first thing they went for was your Rolodex. Nice going, Felix. UNH, University of New Hampshire. UNH. Actually, it's United Health Group. I just like calling it University of New Hampshire because I'm from New England. Okay, first thing I want to see the high, 633. The low, 230. You hear that? 630 to 230. That's a $400 drop. So if you own it in the 600 area, what did you do when it dropped down in the 200s? Did you panic and sell? A lot of people did. Okay, so it drops down to 230, and now it's not bouncing up. It's at 353. Okay, great. What do the numbers look like? 353 at the moment, so the 352.50s is going for 7. That's good. The 355 is going for 6. The 357, that's going for 5. Every single one of those options right here are going for more than 1%. So why the hell not? Well, I'll tell you why not. Do you like the company? Is it what you want, and is that an okay price to buy it? Well, look at the last 30 days. Even though the last 30 days doesn't mean anything, it's just that's what it's doing now. Does it make sense to buy it? Look at the bottom, 250. That's 30 days ago, 250. Now it's at 350. That's a $100 increase. That's over 30% increase. How long do you think that's going to go before there's going to be profit taken and people start taking their profits? It's a valid question. But do you like UNH? Is that where you want to park some of your money? What else do we got? K-Van, MRK also has a dividend next week, an extra $80 per contract. Cool beans, Kev. K-Van, sorry. Simone is in the house. Man M, how would they prove that? Okay, Man M, I'm a little bit lost because, see, I'm broadcasting on 9 channels, which means I have a bunch of questions in front of me. When you say, how would they prove that? I don't know which part of the conversation you're chiming in on and how long ago you actually asked that question. You know, it would be neat if they could timestamp the questions. Okay, so it's 10:40. When did you ask that question? 10:20. That was 10 minutes ago. That conversation's come and gone. I'd love to be able to answer that, but I have no idea what we're talking about. DNT Adventures. Easiest dividend stock to get in with decent yield that makes reinvestment consistent. Okay. Thongyan. Okay. Truth be told, Mike Sweeney, have you ever been so unlucky you had to hold $200,000 worth of stock because your position went down? No, but I did talk to someone this morning that he's down $700,000 because what he bought went the wrong way. I made fun of him because he told me he strayed off the path and he picked something that didn't actually fit the equation. And he told me about a stock I've never heard before. Now, I'm not going to name any names, but so I've seen it before. Me personally, I've done it with Target. So I bought Target a couple of years ago. I think it was $235, and then it dropped down to $202. And I sold the 210s because, you know, it's far enough away. And then the damn thing jumped 30 some odd bucks the very next day, and I'm out 25 grand overnight. Well, that was very uncomfortable. Okay. Now, Mike, the most I've ever lost in one situation was 91,000. Well, that's because I did something stupid. Guess what? Never done it since. It was a very expensive lesson. Now, some of you went to college, got a college degree, and you're working in a field that doesn't require a college degree. So you basically wasted all that time, money, and energy. But did you? You learned something from it. Well, I learned a very valuable lesson from that $91,000 loss. Not to do that stupid stuff again. All right, let's keep on going. Crimson Phantom, Yorks, how you going? Serious question. Uh-oh, everybody pause for a second. York has a service question. Service question. All right. Time to delete. So how many different positions do you enter a week to keep it manageable? I like to keep 5 to 8 stocks per account. I don't like to have a lot. Now, some people I work with, some people I trade with, they have 10, 20, 30 positions. Whatever you feel comfortable with. Now, I have a couple of accounts that have 3 positions and a couple of them that have 5 positions or 4 positions. But each one's different. Because when you buy something and then you sell something, well, then you have a certain amount of money left. Well, that money's got to go somewhere. So you buy and sell something else. And then as the buying and selling, all of a sudden you have 5 positions, 4 positions, 6 positions, 8 positions, 2 positions, and it bounces all over the place. But try to spread your risk. Try to make sure you have, 3, 4, 5 different positions so you have money coming in from different directions. Because, everything moves in their own little orbit. That's a good one. Their own little orbit. I need to roll Exxon tomorrow. Don't want to mess it up. Kevo Jamo. You said Exxon Mobil. XOM. Here we go. A year ago, we're at one. Oh, sorry. High right there, 126. Low right there, 97. Okay, where was it? It was 110. Now it's at 112. Shoots up, pulls back. Shoots up, pulls back. It's actually in an uptrend at the moment. Look at this. Your last 30 days, right there. Okay? Shoots up, pulls back, shoots up again. Now you say you're going to roll it forward. So simple. You buy back the option you sold this week and you sell the option for next week or the week after. Whatever gives you a profit keeps you from losing and resets the new break-even point. Okay, now I know it sounds confusing to a lot of you, but it kind of makes sense. Okay, whatever you buy it for, right now it's at 212. Okay, it looks like it's in an upward trend. It has a lower. Oh, is that higher or lower? All right, hold on. Yesterday, the bottom was 110.84. Today, 110.87. So we have a higher high and a higher low today than yesterday. And it is in an upward trend. So, do you like ExxonMobil? And where do you have it? Where do you think it's going? And look at this. It went from 105 to 115. That's a $10 increase, like 8, 9%, something like that. Pull back right there, profit taking, whatever you want to call it. Pull back, profit taking, retracement, whatever. It was here, now it's here. It's down. Now it's bouncing off the bottom, heading back up. 3 days to the top side. And then once it's over, that third day, then I jump in. Okay, what do you need to roll it forward? Now on Thinkorswim, all you have to do is just find that button. Whatever it is you're looking at, right click, roll position right there, create rolling. It's already right there for you. Create rolling position. You click on that and it does everything for you. Okay, there's the position. 15 contracts, buy 15 contracts, sell 15 contracts. What am I walking away with? 6 cents a share. Now, 6 cents a share on 15 contracts, that's not a whole hell of a lot of money. But here's the thing. It keeps you from losing and it pushes it out an extra week. So get you more time and more money. Well, got to keep in mind that most people originally bought stocks and held them just to collect the dividends. And that only happened like once every 90 days. So you buy the stock, let me check in 90 days. A lot happens in 90 days. All right, let's keep on going. James, what's your website address? Lobo, how are you doing today? So Lobo, top left-hand corner. Where is it? Right about there somewhere. I don't know. Top left-hand corner. There's a little tiny picture of me on your screen. You tap on that. That takes you to the bio. In the bio gives you all the information about me and where my website is. The 10-Minute Trader. Oh, Felix said Warren Buffett bought UNH. Cool. Is owning the underlying stock required first? Well, not necessarily, because you can sell something you don't own. That's called going short, which I don't suggest you doing that, or going naked. Yeah, not a good idea. Okay, that word just, even in public, just doesn't sound like a good idea. Okay? Now, Rich, I wasn't going to use your name, okay? STRC, Ronak Patel, how are you today? What is STRC? Now, you may know who it is, but I have no idea what it is. Hold on, let's get rid of this. Terribly sorry about that, sir. That is a big fat no. I told you I don't do monthlies, okay? It says September, October, January, April. Those are months of the year. It's a no. Thoughts on Gemini IPO? So apparently you weren't listening to what I said either. I don't buy anything unless it has some historical performance behind it. That's 2 decades of consistent profitability. An IPO does not fit. Well, here's the funny thing, is that eventually I'll be offering my own IPO, eventually. Okay, and I'll be saying to the same people, don't invest in my company until I have 20 years of increased profits. Austin, what's happening? All right, I'm going to jump on over to here to find out what we have going on. So Gucci the Bulldog wants to take a look at IONQ. Why the hell you want to look at that thing? IONQ. Okay, I'm going to say no for a couple of reasons. Number one, it's at a 30-day high. Okay, zoom into that. Okay, what do you think? It's at the 30-day high. I don't buy anything at the 30-day high. That's the time to sell, not time to buy. But that's just my opinion. Okay, Gucci, OKE. What the heck is OKE? OKE. That's a hell no. I don't do monthlies. Okay, these are months. I don't do monthlies. Sorry. What else? Billy. Should I invest in a company that sells bombs to Israel? Don't ask me stupid questions. Subgod 123. I've heard of 9% a year, or 5% a year. How do you get 1% a week? Well, I've been showing that for the past couple of hours. Okay, Gianni, I already looked at IONQ. My neighbor breeds dogs to sell. All right, you guys are disturbing. Invest in a company. Okay, all right, I'm done with YouTube. And I feel bad for the people on YouTube because you get some juveniles on there think it's funny to ask stupid questions. Fine. I do need to get a moderator for YouTube. That way I can get rid of the children. RKT, PNG. We are not trees. Travel. PNG. Never heard of it. PNG? Is that something natural gas? PAA natural gas. That's what I thought that was. It has no options. That's going to be a no. Sorry, we are not trees. Mike, 77, RKT for the rate cut. Hell no. Okay, terribly sorry, dude. I don't buy at the high. Why do people want to take a, what are you showing off that it's at the high? Well, it's going to be a no. I don't ever buy something at the high. You looked at the wrong ticker. Okay, we are not trees. I looked at the wrong ticker. PNG. PNG. Okay. You gave me the ticker, PNG. Okay, PNG doesn't have any options. So it's going to be a no. So if I looked at the wrong ticker, you gave me the wrong ticker, PNG. I put it up there, PNG. It's nothing even there. Okay, D-Van. Mark, we looked at that one. Dan B. On Tuesday, it's usually only on Friday to get rid of my coals. It's depending what the numbers look like. High in the 40s. Are you talking about the temperature in Canada? Oh, PZG. Okay. See, that wasn't me. That was you, dude. PZG. It's still a no, dude. Okay? No options, no thank you. And this thing was less than $1 a couple of weeks ago. So there's no possible way on God's green earth this thing can have 20 years of increased profits. No. Simple. 20 years consistently profitable. This thing was at less than 50 cents a couple of months ago. So what kind of profit can it have over the last 20 years? Epic. I have a question. Life insurance or real estate is a good to start a career? Epic. Here's my take on that one. If money wasn't a factor, if you didn't need money to pay your bills, pay for food, blah, 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 okay, what would you do? That's the question. If money was not a factor, what would you do to contribute to society? So take money out of the equation. Find something you enjoy doing and just do it. Mike, bank sector. I don't go by sectors, Mike. I go by the calendar. Hold on a second. I haven't shown this for a while. Nobody's asked the question. Okay, do you see the calendar? That's called an EX dividend calendar. Let me get up for this one. I'm running out of tea. That's not a good thing. All right. This is an EX dividend calendar. Here's the date, September 2025. Where are we? We're on the 11th, which is right here. All these little green dots today. All those companies are paying a dividend. That's the EX date, that little green dot. What does that mean? Well, there's 4 dates to remember. Date number 1, that's the announcement date. That's when the company's spokesman comes on. Hey, everybody, this is James from Dividend Stock Talk. We had a great year. We made so much money. This is how you're going to get your share and on the date that you're going to get it. That is the announcement date. That is right here. Announcement date. The next date is called the EX dividend date. Date number 2, EX dividend date. Okay, that is the last day the stock trades before the dividend is paid out. Okay? It's kind of like you see a sign in the doorway at a store, open 9 to 5. You come before 9 to 5, you can't get in. You come in after 5, you can't get in. 9 to 5. It is what it is. If you own the stock, date number 3, on the date of record, you are entitled to that dividend. That is yours. That means you bought it or you owned it on the right date. God's a smiling upon you. Yay! Cha-ching for you. Thank you. Date number 4, payment date. Basically when you're getting your money. That's all that means. 4 dates. Announcement date, EX dividend date, date of record, and payment date. Okay, great. HWM. Felix, what is that? Oh, so let me finish. I go by the calendar. When is the company paying out a dividend? So remember what I'm looking for. Companies that are consistently profitable. Great. Do I care if they're in hard goods? Do I care if they're in oil stock? Do I care if they're in banking? Do I care if they're in travel? No, I don't. I care, are they profitable? Are they paying a dividend? Is that increasing? If so, great. Then I want to look at it. I don't care what it is, what it does. Are they profitable? Is it the right time? They're very simple questions. Epic, can you please answer the questions? Okay, Epic, I cannot answer the question for you only because I know absolutely nothing about you. Okay, so if I knew anything about you and what you wanted to do with your life and where you want to go and how you want to contribute, and then maybe talk to your family, get an idea of what they think you should do, well, then I could give you a better answer. So I don't know what it is you're looking to hear. Are you looking for what pays the most? Or are you looking for what has the best security? What has the best company perks? I have no idea what you're asking. You're asking what is better. I have no idea who you are or what you do. Okay? So real estate, you buy a house, you sell a house, you get a profit. Are you going to be an agent where you buy and sell for someone else and you collect a commission? Or are you going to buy a house, fix it up, turn around and sell it? Don't know. Okay? And when it comes to insurance, are you going to sell insurance? You're going to open up an insurance company? Okay? You ask a better question, you're going to get a better answer. So the question you ask, I have no idea how to answer that question. Okay? Because I know nothing about you. Okay, Felix, HWM manufacturing jet engine blades for General Electric engines. Cool. Well, let's take a look at HWM. HWM. It's going to be a no. Okay, so let's take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. It was at 90. Now it's at 180. That's a 100% increase. In a year, 100% increase. Well, that's pretty damn good, right? She shoots up, pulls back, shoots up, pulls back. Now she's going up again. Simple. Okay, great. What's it costing me? 184. Well, the 185s are going for 290. That's over 1%. Oh, great. Now let's look at those numbers again. Is it the right time? Well, a year ago was the bottom of the year, and that was 90 bucks. The high of the year was 193. Well, from the high of the year, which was a little over a month ago, she drops. Now she shoots back up. Well, look where the high is right here. Look where we are now. She still has more room to go up. It just looks good. That doesn't mean it's a good trade. I'm just saying it looks good. Okay, so that looks good. And if I buy it here and I sell it here, I make this right here, can it stay above 185 by next Friday? If so, I make my money. I get all my money back. I get that profit. We move on to the next one. Steven, Everyday Dan, how are you today? Hey, Dan B, on Tuesday, it's usually only on Friday to get rid of my coals. It depends. Always a numbers game. What did you buy it for? What did you sell it for? What's it at now? Coals may be a good one next week both ways. Well, let's take a look at Coals, KSS. Now, Coals has been one of my favorite stocks for the past 2 years, just because it's continuously profitable. Well, let's look at the last 30 days. This is what it looks like. Here's your bottom. She shoots up, pulls back, shoots up, pulls back, shoots up, pulls back. What's going on now? Well, here's the bottom here. Is it keep going down? Because that's what it looks like. So we need a couple of days to the upside before jumping back in to Coles. So it's kind of like sit and wait. It's kind of like the military. Hurry up and wait. Hurry up and wait. I remember going through basic training in 1981. Hurry up and wait. Move it or lose it, Joe. They call everybody Joe for some strange reason. Thank you there, Mr. Dan. Do you worry about diversification or just stick to a select few at a time? I just stick to a select few at a time, and I only buy when it looks good. It's not guaranteed. Only 3 guarantees in life, and making money in the stock market is not one of them. DJ, K-View. We like K-View. We did that a couple of times. Let's take a look. I think we did. KVUE. Interesting. Take a look at the last 30 days. Right here. Hey, here's the top. Dropping. Found the bottom a couple of days ago. Now she's bouncing up. Well, how much of a bounce is this thing going to give us? Well, let's zoom on in. Okay, here we are, 30 days ago. The high, the low. Where was it? Where is it? Look at this. Sideways, down, up. Well, that's easy to see. Okay, it's currently at 1885. Well, the 1885 is going, closest one's the 19. That's going for 34. Well, that's over 1.5% if you like K-View. And it always comes down to that. All right, we're past 11 o'clock. That's where I draw the line. So let's take a look at what we have left for questions. Okay, what do we have over here? Oh, is that the only chart previous 12 months? Yep, we already did that one. KJ, what are your thoughts on position sizing? I like to have 4, 5, 6 positions per account. So if it's going to be five positions, it's 20%, 20%, 20%. 6 positions, it's like 16%, 16%, 16%, whatever. Thinking of various sizes of accounts, folks may have 100, 500 mil, 3 mil, etc. The larger your accounts, the more you are going to have to buy, obviously, to get 1% a week of your portfolio. Okay, it's just a numbers game. Okay, whether I have 1,000 or 100,000 or 100 million, a 1 is a 1 with a bunch of zeros. So instead of 1 contract, I'm getting 10. Instead of 10 contracts, I'm getting 100. It's just a 1 with a bunch of zeros. It all depends on how you look at it. Is that Renogy? Reggie, where can we check the calendar? Okay, Reggie, this calendar is part of Thinkorswim. Now, Thinkorswim's a trading platform. Okay, so you could go to Google and find out an EX dividend calendar and find one, or you can just sign up on Thinkorswim, which is through Charles Schwab. To what pay the most? Okay, Epic, you're asking the wrong question, because there's a job that pays $1 million a year, but you may not like it. Okay, there's a lighthouse off the coast of France. Your job is just to make sure the light stays burning, and they pay you $1 million a year. Okay, a lot of people don't last because of the situation. So there's always going to be a trade-off, dude. What are you wanting to get? What is being offered to you? And is that what you want to do? That's kind of what he's doing. Thank you there, Cuckster. He is on every night, not Sunday, Thursday. Give me one dividend to make money every week. Now, see, Epic, there's a whole bunch of them. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there will give you about 300 companies to take a look at. Okay, there's 10,371 companies just this week. You have to, I can't tell you what's right for you. I have nothing at all about you. So I cannot give you an answer. I have a dumb question. I'm thinking of putting 100 grand only into Kohl's for only the monthly dividend. Okay. Now, again, Wildcat, I'm going to tell you the exact same thing I just told Epic. I know absolutely nothing about you. So I don't know if that is a good play or not a good play. And then I don't know if you're talking about that $100,000. I don't know if that's pocket change in your world. I don't know. Or is that your whole life savings and you borrowed grandma's money too? I have no idea. I don't give advice. I don't give tips. If you want to have a conversation, send me your number. I will give you a call and we will have a more intimate conversation so I'll be able to answer your questions a little bit better. Okay? Give me one dividend stock to make money every week. There's a whole bunch of them out there, dude. And no, I can't. I'm not going to give you a stock for you to look at. I don't know anything. Well, then keep coming back. Come back it's free information. I'm not charging you anything for it. Ask a decent question. I'll give you a decent answer. If you ask a question, can I have a stock that will make me money every week? Well, yeah, but what you're not asking is the amount of money. Epic, don't put your phone number here. Send me a DM because you have no idea who's going to call you now. Okay, when I say send me a DM with your phone number, I personally will call you. So if you get a text message or you get a Telegram or an Instagram or any of those things saying, hey, it's me. No, it's not. I actually personally call. And this number's not going to stay there. All right, I'll write it down. Making me go through extra efforts, dude. Okay. Let's see this for the fun of it. Just for the fun of it. Let's see if we can do this. Don't go anywhere. I don't know. Did that turn off? Does it turn off when I do that? I'm not going to do it because that phone is being in use. All right. So we're done answering questions with that. We're done answering questions over there. We're done answering questions over there. 1,000 scammers wrote his number down too. Yep, I'm pretty sure they did. All right. Over here, and then that's it for the questions for today. Margaret, how are you today? Dan B, great question. The Coles, I might do 30. Okay. Jose James, enjoying profits following your strategy. Way to go, Jose. Epic, you got 3 phones. I got 7. I got 6 right here, and one that I'm not using. I've never seen you read your questions on TikTok. This is a special night. No, I read my questions every single night. Okay? 15 minutes before the end of the day, I sit down and I read all the questions. Can you check for me CNN? We'll have to do that next time, Caleb. Sorry, we're way past 11 o'clock, and I want to get to the other questions on the other channel. Dan B, Jose, how long have you been doing it? Hey, Dan, there's a bunch of people there. Sailing Newbie. Hey, James, what about PCG? Now, Sailing Newbie, do you sail like a sailboat? Or is that something you aspire to do? Okay, the reason I ask is we're buying a boat, the company's buying a boat, and we're taking the show on the road. So I'm going to have my screen and all my computers and all my cameras. We're actually putting it in a boat and going from one port to the next, to the next, to the next. Now I'm saying it out loud, so I'm pretty much committed to doing this next year. Okay. Stephen, I'm praising your 5 rules. Thank you, Stephen. Marky, thank you very much, sir. You're welcome. Bordelio, how you doing? Johnny boy, what's going on? Hey, Dr. Dev's back again. Dr. Dev, how are you doing? Hey, Dr. Dev, you asked me the other day, what do I think of a bear call spread? Love it. I do. I don't do them because they're not as predictable as you would like them to be. And if you're wrong once, you got to make it up. It's like a 3-to-1 ratio. Every time you're wrong, you got to win 3 times just to break even. So I don't do them anymore. Stephen, he doesn't use deltas, no part of the 5-rule strategy. Now, Stephen, for my 9-year-old daughter, I wasn't about to express to her the Greeks because it just doesn't make sense to a 9-year-old. It was simple. Is the stock going up? Great. Is it a profitable company? Great. If I do this strategy, is it safe? Great. How much am I making? Great. Okay, it's always by the numbers, and it was specifically for a 9-year. And you want to get into the deltas, fine. Getting into the deltas, it allows you to make a consistent profit and a little bit more of a profit. But you're putting more time and effort. More time, more effort equals more rate of return. Okay, simple, safe, predictable, easy is about 50% per year. Okay, you add deltas, maybe you can get 51, 55, 60. But you're trading off time for money. So 10, 15 minutes a day, great, 1%. About an hour a week. I'm okay with that. Where else are you live on? 3 YouTube channels, 2 TikTok channels, Twitter, Zoom, Rumble, LinkedIn, Twitch, and I think there's a couple other. So, and we're going to be adding some more. And we're actually going to be doing a TV show also. So we're actually going to be buying a TV channel. So we're trying to figure out, besides this, what else can we share on the TV channel? So we're thinking of some reality shows, just like follow along. It's like The Adventures of Papa G. I'm going to buy a boat in Canada and take it down the West Coast. And as we go from town to town to town, we're slowly going to renovate it as we teach people how to invest. It ought to be a fun thing. Is Advanced Micro Devices stock for a swing trade today or tomorrow? Okay, Javid, why not cash secured puts? It seems like you have less risk if you do not cost basis is lower in premium. Kilroy, I hear what you're saying. I'm going to agree with you, okay? But then again, when you're doing cash secured puts, it's almost the exact same. Hold that thought. I'm not used to talking so much, so the T helps. Yeah, it helps the vocal cords. Okay, see, now I do cash secured puts. I just don't teach them here. Okay, now I know a lot, which means I could share a lot, but that's going to take more time, more energy. And I have to draw the line somewhere. Cash secured puts is a good strategy. Don't get me wrong. But I have to limit what I give away for free because people will take advantage of it and ask me questions over and over and over again, but all different other things. So no, one strategy, that's it. Okay, 1% a week, that's what I'm looking for. Got it? Thank you. All right, we're just about done. Domino's Pizza way overpriced. Sailing newbie, why so many accounts? I don't trust the government as far as I can throw them. Daily, you do this all day? No, I do not. Okay, I have 2 live shows. One in the morning, that's a paid group, just before the market opens. We take a look at the 3 accounts that I share publicly, and then you get to see exactly what trades I do. And then I take a look at your account or, answer questions for you. That's the morning trading group. And it usually lasts between an hour, hour and a half. Because it's a simple strategy. You buy whatever, just like I've been showing you here. But we're doing it live. Then at night, I sign on at 9 and I'm done at 11. Okay? So for the rest of the day, I do whatever I damn well please. Which a lot of times is nothing. Because it's my life and that's what I want to do. I'm past the point where I need to be working all the time. Okay, done with the questions here. Done with the questions. I'm not even going to do YouTube because I feel bad for you guys in YouTube. Okay? Because you have some people that just keep playing childish games. Okay, I got pajamas on. What the hell does that mean? And why are you sharing that on a dividend investing channel? He's got pajamas on. Okay, that makes no sense. All right. That being said, it is Thursday. I don't do Friday nights and I don't do Saturday nights. So I will see you all Sunday night. You guys have a great day and we'll do this again next week. Alrighty. Epic, I'm going to give you a call in like 2 minutes, so don't go anywhere. Done here. You guys have a great night. Leave message. There we go. Leave. And then done here. Oops. Hit the wrong button. Done. And good. And broadcast. And all right. That's done. That's done. That's done. Okay, here. Okay, Epic, don't go anywhere. Jacob, DM maybe. How this long have you been doing this? Oh, how long have I been doing this? Oh, about 2 years. Live broadcasting. But I've been investing for over 30 years. Jacob, I am new, would love some more info. I'm here every night. Where's a pillow? Z, what are you talking about? All right, not even going to acknowledge that one, dude. You guys have a great night. We'll see you again next time.